The headline, in my opinion, is we had the best broadband quarter in 10 years, 363,000 net adds. We now have a gigabit of speed available, more than any other company in the U.S. To every one of our customer homes is availability of the fastest internet that anybody has. And we had the best EBITDA quarter in cable in 6 years at 7.6%. And our free cash, or net cash flow, grew 15.6%, and it's the third consecutive double digit. So the core business is really showing great momentum. It's been that way all year, and I think Dave Watson and the team are doing a sensational job. At the same time, at NBC Universal, the television businesses, cable and broadcast, were up 6%. We knew we had Despicable Me 3 last year, so film would have a tough comp, but still had a good quarter. And MSNBC, just to pick one cable network, has the largest lead it's ever had over CNN in the key day parts. So the Comcast, NBC, and Universal, I'm really thrilled with the third quarter, and I think that's why we were able to beat a lot of expectations.
Brian, you referenced this at the top, just that there had been some lingering questions about the strength of the business, people wondering if that's why you had been interested in an acquisition. How much of the overhang in the stock do you think was because of that, and how much of the overhang do you think was just because of people wondering about how much you'd pay for any acquisition?
I think there's a lot of, when there's uncertainty, it's tough for investors, and I understand that. And when you're making a big bet that may or may not happen, may or may not be the right thing to do, there's uncertainty with that too. So the good news is I think this feels like a new beginning. The momentum from cable is powering the EBITDA and the free cash flow for the company, new subscriber growth. But now that Sky's resolved, we really are better together. And if I might, I would take a couple points about Sky. First of all, it was a competitive process. It took a long time, same for Fox. We ended up winning by about 10%, which is the same margin that Disney beat us for Fox by about 10%. That's what it took. That's what the market was. And I think the value is definitely there, and we'll show that over time. What it does for us is you start and say, is Sky a good business as a standalone company? And it's a fabulous business. It's very different than the U.S. They're not just the provider. They're not just the content company. They are both. 4 of the top 5 shows are all originals of Sky Entertainment. The Sky Sports, Sky News, Sky Movies are on all the platforms from different competitors, and they're really leading the way in that whole most European markets. It triples our footprint in the television business and doubles our footprint in the broadband space. They're the number 2 broadband provider. People didn't really understand that. They're just launching an exciting broadband product in Italy. And so when you put us together, our cable channels and our broadcast channels, we're the top 4. In the top 4 countries where we operate, we're number 1 in each of, we're the number 1 content producer in each of those countries. And if you look at, in terms of the model that has powered Comcast to have 23 straight years of EBITDA growth, that's the subscription business. Well, that's what Sky has as well. So it adds to our successful formula. So we think together we can do so much more. We have a number 1 platform, number 1 in U.S. cable, number 1 in U.S. broadband, number 1 in UK pay TV. And that is great for our partners and content providers and technologists as we go forward. So we're controlling our destiny into the future of that I think looks very interesting and exciting.
If you were totally, just to tell us what you were thinking, and you don't have to, really, if you don't want to, but was this the real outcome that you wanted all? I know how much you wanted Sky, and I know, you know, that Comcast went after the other assets, but it seems like that other play made it possible just for everything to work out for Sky. Is this the best outcome for you, or would you have liked the whole thing? I think you always wanted...
This is the time I can say I can't hear you anymore, that my feed went out. Look, we're thrilled with the outcome. I'll let you speculate how the journey got us here. But remember, we did bid for Sky before we bid for Fox. I think they're both wonderful companies. What Rupert Murdoch, James Murdoch, Lachlan, and many other people built is a very special company. And that's true with both parts of it. But Sky does look a lot like Comcast, NBC Universal. That subscription model, that market leadership, their brand is better than any media brand in the U.S. or communications brand. They really are a products company, and they have great leadership in Jeremy Darroch, and I'm pleased that He's staying with us and is going to lead Sky and work with Steve Burke and the rest of the team here, with Dave and myself, Mike Cavanaugh, and we're going to drive a company that's so unique and now global. It's an exciting day.
It was a long shot, too, I think. You were in that cab, and I mean, but with the way the ownership was with Rupert, right? It was a long shot at that time. And if you look at this, the entire strategy, the art of war, whatever it was, to end up here, I don't know what you thought the initial chances are when you said, well, Sky's pretty attractive. What do you think, in your mind, the initial chance of you succeeding were when you decided
We knew
to
the prize was worth it. I don't know what the percentage would be, but I learned from my father, if you don't try, you don't find out how it turns out. And if the worst that happens was we didn't prevail, even though it's tough on these kind of interviews, it's not how you build a great company. And we've been doing that for a lot of years. When we bought AT&T Broadband, even NBC Universal at the time raised a few eyebrows. I will say, one of the things that heartens me the most is the reaction of the employees. If you think about it, the employees at Sky, the employees at NBC, and the employees at Comcast know this company better than any just casual part-time investor where you have a portfolio. This is all we do, and for most of us, it's where we have most of our net worth. The reaction from the employees is unlike any deal I've ever been part of. Maybe it's because it was a long shot. Maybe it's because it lasted a long time. I think it's more than that. I think it is the enthusiasm to take what they do, now be able to do it on a global scale, do it with the best in both continents. Comcast is #1 at what we do with X-Fi and X1 and our great products. And NBC is now the #1 broadcast network, first time in 16 years, and been the 5th year and 6th year and since 18 to 49, but it's #1 overall. And over at Sky, the #1 brand in entertainment and communications. And to have all those parts to now lead into the future, it's transformative. Mm-hmm. And we're delighted here to have the kind of great results to show we can operate well and we have a great strategic road ahead.
Hey, Brian, let me ask you again about Wall Street reaction to some of these things. There are a number of analysts on the street who now either have buy or overweight ratings on Comcast, but they've raised some concerns. Even some of those very same analysts who think that the street reaction by selling this was overdone. One analyst raised this question. He said that you paid a full multiple at the top of the cycle, and that's a deviation from the normal sort of acquisition that Comcast makes. What's your response to that? How do you answer that to say that it was worth it?
Well, you'll judge us in 20 years. I try to think the job for management is to put on earmuffs and try to do what you think is right. If you had a private company, you owned it all, what would you do if it was all your own money? Mm-hmm. And I think the employees, not just me, the senior leadership team, were all in that this was the right strategic move for the company at the right price. We were 10% higher bidder, as I said. I don't think that's a big gap. Again, to the point that was made, you had a 39% stockholder. You needed a margin to outbid the other folks. But what we're going to do this morning is introduce Jeremy and the Sky narrative for really the first time to American investors. It's not a stock that was widely followed over here. It did have a large shareholder, so it was a kind of been in takeover mode. They only put the 3 different countries together into one Sky in the last few years. And so Jeremy's going to take investors on our earnings call in a little bit this morning through a greater detail. And I think as the people get more educated and see the answers to the obvious questions of what about the change, how Sky positioned to continue to grow. They've grown every year they've been in business. That's basically the same truth for Comcast. They have the best product. We feel that's definitely the case here in the U.S. And the chemistry is off to a fabulous start. So it's one day at a time. There aren't always answers, but the good news is all that's behind us. Our priority is to get our balance sheet back at where it was as quickly as possible. That's the priority and focus now. Execute and get the debt to cash flow levels back to what they've historically been, and that's what we've told the rating agencies. So we know what our work ahead of us is. We're thrilled to have this opportunity, and so far, off to a great start. It's only been a month, so it's very, very early.
Brian, you started out by highlighting the strength in the core business. Wanted to get a sense of just how sustainable some of that improvement is, because you talked about the net additions of cable communications customers, broadband. It's a big number. It's obviously growing faster than the industry. Where is that market share coming from, and can that kind of thing continue? And then the reduction in capital spending, is that a structural thing, or is that just you dialing it down for now?
Well, we've seen capital spending has been coming down. I'll take the second one first. This capital spending as a percentage of revenue has been coming down, and we predicted that in the beginning of the year, and we've revised that even and confirmed that and made it slightly better, I believe. The same for broadband can be said. I don't know. I never like to look forward and give guidance that that you don't know where a sale will go tomorrow. So the better way to look at is what happened this quarter and last quarter, which was the best in 9 years or so, last second quarter. So we've had this momentum now for a little bit. I don't know that it can continue to be 150% of the year before or even higher, but we are seeing north of 1 million broadband subs year in, year out. Why is that? Well, streaming is our friend. People want the best. They have now, our power users have 20 connected devices. They're using 600 gigabits a month. That's 10% of our customers. That's more than triple what the average customer is doing. And if you had to make a bet in 5 years, 3 years, 2 years, 10 years, will you look more like the power user today, or will you use less tomorrow? And I think the trend has been with smart devices, Internet of Things, gaming, all sorts of application, virtual reality, whatever might be coming next, you need the best network, and that's job one, and that's why I think it's sustainable.
Other people, Brian, said, pay TV, we still have these cord-cutting worries, all this stuff. So, it's worrisome enough to have a big presence in the United States with that. Now you've doubled down on that whole business. And in 20 years, I wonder what everything looks like at that point. Yeah, go ahead.
Well, I think that very fair question. First of all, we had a good quarter in video that we've seen many, many more competitors here in the U.S. And one of the things that I think investors will hear about today and can learn about is the structural differences, very significant differences between Europe and America in the pay TV market. First of all, free to air is much, there's 100 free to air channels. That's not the case in the U.S. There's, in some of the markets, each market's different from itself. There's lower pay TV penetration, more upside in Europe than there is in the U.S. And the difference is that the programming is called Sky Atlantic, Sky News, Sky Movies, Sky Sports, whether it's on our platform or on other platforms. And there's less new competitors because of some of those structural differences. And Sky made a tough decision, and I give great credit to the leadership. Back in 2005, they started to create light packages, what we would call light packages here today. You could buy it by the day or buy just the sports you're interested in. And so they compete with themselves and gave customers more choices. And that's why their results are balanced and growing. But they also have a broadband business, different rules that allow them to have broadband. They build some of their own facilities, but they lease others. They have a mobile business like we do, hardline phone business. And because their brand is so respected, they move and sell new products. And so they have a pretty exciting roadmap at Sky for the next several years. And as the markets change, great leadership evolves with it. This gives us tremendous flexibility and capability that we didn't have before to innovate, to attract content, to do global deals. I think people will be very pleased with how Sky performs. But it's early, and we're just going to have to show you.
Just one more, just cord cutting. Where's Hulu going? What are your plans? Can you tell us?
Dropped out again, unfortunately.
Oh, there you go.
I think he's serious. I think he's serious.
It really did drop out. It wasn't a Hulu. Well, let's see if we can get him back. I wanted to give him a chance to say something about wanted to give him a chance to say something about CNBC in relation to that MSNBC comment. I mean, I know he loves
Take a look
all
at
of
shares.
his children.
Take a look at shares of Comcast
Okay,
this
yeah,
morning,
that's all right.
up by
Yeah.
3.75%, $1.28 to $35.40. The shares have come under pressure, but you can see rebounding off the lows.
Is he
There
back?
was all that concern about what happened, what would happen with the Disney Fox acquisition and then Sky. You can see right now, though, up by about 3.75%.
What about Hulu, Brian? Do you have? What can you tell us?
I can't really. There's no real new news today. We have a good content relationship with Hulu, and there's nothing driving any imminent decision. So we'll just have to stay tuned. We've been there. NBC. It's really an NBC property,
Right.
the investment, and it's been there since day one of Hulu. And we're back on the board, and let's see where things go from here.
Hey, Brian, I want to thank you very much for your time this morning. I realize it's a busy morning and you have a lot to do, but we do appreciate your stopping by here.
Thanks, and good to see you guys soon.
Good to see you, too. Brian Roberts, the chairman and CEO of Comcast.